folks, welcome to BP Area Live Action News. Bob the Builder has reportedly entered Alcoholics Anonymous after allegedly passing out on the job. We have some footage from the scene.
Hey!
Is he drunk?
Mr. Builder released a statement blaming this slumping housing market affecting his business. Shout out to Animunch for that video, absolutely hilarious. They have some really cool stuff over there. Link in the channel is in the description below, check them out. In all seriousness, home builders report steeper downturns, possibly as much as 20% drop in home prices by 2023. Stay tuned for more details and how you can use this information as a real estate investor. What's up, everybody? I'm Sean McMurray, co-host of BPM REIA Online, and this is Mr. $250 million in real estate transactions, my mentor, my good friend, president and owner of BPM REIA, Anish Dave.
Hey, this is Anish Dave, president of BPM REIA, and I'm happy to see you guys again and enjoy the video.
Data. What's up, Anish? I know Halloween is over, but what has home buyers more afraid to purchase a home than ghosts?
What does?
High interest rates. At least according to home builders, as they predict sharper downturns as high interest rates scare away buyers. Here's what we know. We have low supply and high demand. So what could exasperate the situation even more? If home builders stop building. The U.S. Census has reported housing starts for single-family homes is down 19% year over year in September. Building permits, which predict future construction, fell 17%. One of the nation's largest home builders, Pult Group, has reported its cancellation rate jumped from 15% in the second quarter of this year to 24% in the third. Things have gone from high to low quicker than the Wolf of Wall Street's drug binges. As a comparison for how quickly things have turned south, barely 6 months ago, single-family housing starts were still up 10% year over year. As previously stated, we are now down 19% in that same time frame. Anish, as mortgage rates continue to rise, as homeowners continue to cancel contracts due to unaffordability, and as home builders slowly stop building, could we see a decrease in supply, further propping up home prices, continuing to spiral out of control?
Yeah, so Sean, what's interesting is, when you're a home builder, you have to think in advance, maybe 2-3 years in advance, to build these projects. So yeah, I think what's going to happen is affordable housing, there's still not going to be enough. So as long as you're under conventional mortgage rates or conventional financing or FHA, there's still going to be low inventory. So which that means for us, prices will still go up in that spectrum.
Demand. When thinking about demand, we have to think about the factors that influence it. Work from anywhere. The vid pandemic and the ability to work from anywhere put a lot of strain on an already weakened supply. Low interest rates. Low interest rates made it very enticing to purchase a home for cheap. The economy. With the ability to borrow money practically for free, the economy was steaming along and people were making money hand over fist. Today? Let's jump to today. Businesses are making the push for employees to come back into the office. Interest rates have doubled. Your mortgage is now twice as much as it was for the same home. The economy, although still chugging along, is perched on an iceberg floating on a sea of lava. Inflation?
Forget about it.
Inflation is kicking everyone's ass, all leading to an inability to afford homes and leaving people unconfident in their ability to be able to support their families, much less a mortgage. Seriously, people are choosing between filling up their gas tank for work or buying food for the energy they need to get through it. Anish, do you see demand continuing to drop? And if so, how does this affect us as investors?
Yes, Sean, so I think demand in general may drop, but there's a lot of properties out there in horrible condition, right? So as people can't decide on paying their gas or their mortgage payment, they might get into some trouble. And it's gonna take investors like us to finish those houses, fix them up, get them mortgage ready, and get new families in there. So for us, what we're doing in our niche, there's going to be a lot of opportunity. What we've also seen is bankruptcy rates have gone up almost 25% in our counties down here. So if you're in the right spot and you have different strategies of finding properties, especially off-market properties, we're in good hands.
What do you do? As an investor, you are looking at these data points asking yourself, What does this all mean to me, and how can I use this information? Should I continue to invest? Anish, real quick, should investors continue to purchase real estate?
Absolutely. I mean, Sean, without a doubt, I don't know where else you would put your money. We're looking at some of our students, even wholesaling deals, even today for $100,000, $125,000, not fixing the house. So there's a ton of opportunity if you're looking in the right spot.
Okay, follow after me, y'all. Number 1, take a deep breath and repeat after me.
Goose fraba. Goose blah blah.
It's important you stay calm and be patient. Focus on solutions, not the problem. Number 2, in the description below, you're going to find a link under the word coaching. Copy and paste that link into your URL. Click book a discovery call and input your details. This is our coaching program that will finance 100% of all deals and split the profit 50-50. This step is important because you need access to money. You can swing it yourself and try to lock in a high interest loan and take all of the risk yourself, or you can invest none of your money, place 100% of the risk on us, and split the profits 50-50. Your return is infinite. Try to beat that in the stock market. Number 3, if you've been shopping retail via Zillow, for example, try this. Grab this. Grab this. Grab this. Look for this while bike riding. Get this. Better yet, knock on the door and talk to the owner. If you've been shopping retail, you are paying too much. You need to adjust your strategy. Find FSBOs or for sale by owners. You may be able to solve a problem they have and get the property at a much cheaper rate. This is crucial in both a good and especially in a bad market. Number 4, lastly, now that you have your property, use Zillow or whatever tool you use to find properties. We use REIFax. Type in the address of your property and now find properties within half a mile to a mile for sale and that have sold. Ensure that 3 or 4 properties you find look very much like yours. Bedroom, bath, square footage, and even condition. Once you've identified your home value or your after repair value, reduce it by 15 to 20% or whatever the potential decline could be in your market. Now, run your numbers against that reduced ARV, and if it still makes sense in that situation, purchase the property. You've now provided a buffer if the market turns south and created equity in your property. Anish, are we missing anything? How can investors use this information to make better decisions when investing in real estate?
Yeah, so Sean, you know what? There's a lot of great data out there. Back when I was young, there was no internet. So it's easy for you guys right now that there's such great software out there. And the key to the game is really to talk to sellers. Make those offers out there. You got to talk to as many sellers as possible. And yeah, of course, they're not all going to say yes. But when they do say yes, it's going to be some big dollars for you.
High interest rates are hurting everyone in the market, especially home builders. Although inventory still lags behind demand, demand is slowing. For investors, we must be flexible and adjust to the current market conditions. Remember, be patient, obtain access to funding, be flexible with your strategy, be conservative with your numbers. Following these steps have allowed us to close on over $1 million in real estate deals and reduce our risk. Anish, final words.
So Sean, it's still a great time to invest in real estate. We've been still crushing it. Our students, us as investors, we see a ton of opportunities. Don't get caught up on all that noise out there about the economy. At the end of the day, we're in Florida, we're buying, we're making money, and we're making an impact in our communities too.
And we're out.